Good morning, everybody. Mike Tedeschi over at Perspective Wealth Planning. I want to take a look at the four major U.S. indexes as well as breadth readings. But before we get into that, I wanted to take a look at the market year over year. Beginning of October last year was right here, and the beginning of October this year, was right here. We essentially, over the course of an entire year, have gone almost nowhere on the S&P 500, but we've done it in spectacular fashion. We had that sharp 20% sell-off to end last year, and then that sharp rally in the beginning of this year. But really, since May of this year, we have not gone anywhere. Market's traded in a pretty tight range, and it's actually set up in an interesting technical pattern. It's one of my favorite bullish patterns. It's only bullish if it gets confirmed, but this is an ascending triangle pattern. What an ascending triangle pattern is, and the reason why it is bullish, is we have a series of higher lows and a flat top. And if we think about the buying and selling that takes place, buyers were stepping in at this point in time. On the next sell-off, buyers stepped in earlier. They didn't wait for price to fall all the way back down to the previous lows. They didn't think it was going to get down there. They stepped in earlier. On the next sell-off, once again, they stepped in at a higher point. So as time goes on, each of those sell-offs, buyers are buying it at a higher price point, which is bullish action. But sellers are still rejecting that 30-30 zone on the S&P 500. So if we were to make a break over that 30-30 zone, then we would have confirmation on this ascending triangle pattern, and that would be a bullish setup. And if we took a look at our fib extensions on an actual breakout there of that 30-30 zone, our target on the S&P would end up being about that 32-40 zone. That would be the measured move off of this particular pattern. So we're paying very close attention, but in order for this to confirm, again, we still have to make a breakout over those and to new all-time highs, and we have to hold over it. We can't have one of those. Let's marginally break it by a couple of points, hang out there for a couple of days, and roll over. So the bears at this point in time are looking at this, going, yeah, we haven't had a new high since July. Every time the markets come back up into that zone, it's failed. We haven't gone anywhere. So really, the bulls haven't won at this point, and everybody is watching this zone. And so that's what we're paying very, very close attention to, is what happens right here up at that 30-30 zone. For the on the bearish side of things, really we need to take out the last low and negate the series of higher lows. So again, we have a series of higher lows here. If we were to take out 2850 on the S&P, then we would have a lower low, and that of course would negate that higher low setup. So that is what we are paying attention to right here very closely. We take a look in at the NASDAQ. Let's clear out the drawings from our last week's video. Very similar setup here. We have essentially that flat top, and we do have not quite as clean of a line as we had on the other one, but we do have a set of higher lows still there in on the NASDAQ. We take a look at the Dow Jones. All right. We also have not made a new high here since back in July, and we do also have a set of higher lows, and you can clearly see that again right in here. So same pattern on all three of those indexes. The Russell, on the other hand, still is trapped inside this range. And we talked about this. This is where the majority of price action has taken place over the last couple of years. When we take a look at this, right, our major level of resistance, which we have not traded over since the sell-off at the end of last year, is really that 16-16-20 level, and we have been unable to break underneath that 1450. And so this is really just a trading range right here, and we're going to continue to watch what the Russell does. Right, I think it's very difficult for us to really rock and roll much higher on the rest of the indexes if we're not going to have participation from the mid and the small caps. So we want to pay very close attention. If we do get a break over 1600 there on the Russell, that would be a very bullish signal into year end. And of course, on the flip side, if we were to break underneath that 1450 level, that would be a very bearish sign to take a look at into the end of the year. So really, where we're at right now, especially in here on the Russell, which is pretty much exactly in the middle of the range, right in here, we're just really watching to see what is ultimately going to happen here. We have not left this range for the entire year since we entered it back in January, and it is a very important zone to pay attention to. One of the things we continue to take a look at, as it is very important, is the breadth reading, and I like to take a look at the NASDAQ McClellan Summation Index and the NASI. What we have right here is once again a crossover to the upside. We're still underneath that zero line, so really what bulls need to see is we need to see that breadth reading come back up over that zero zone. But if we look at this from that same lens, right, we actually do have a higher low in our breadth reading. We actually have higher highs that we've put in here since July as well. So essentially an upward channel has been made in on this breadth reading. But I don't want to overanalyze this. Bottom line, when the lines are crossed and pointed up, we have tailwinds for the market. When the lines are crossed and headed down, we have headwinds for the market. So as we're sitting right here nearing those all-time highs on 3 out of the 4 indexes, we do have that positive tailwind out of breadth as we run into the beginning of earnings season here. And this could be that finally that catalyst this earnings season to potentially make those pushes up to new highs. Or once again, this earnings season could be a reason why we fail right at that resistance level of 3030 on the S&P, and as we discussed on the other indexes as well. So very important time technically here on these charts. We're going to continue to pay very close attention and keep you apprised of the situation here in these weekly videos. I hope you guys have yourself a fantastic weekend. As always, take care, and I'll see you next week.